welcome to the educational video where I attempt to explain how I went about trading the manufacturing production from UK, which was released today. That's the 12th of June, Tuesday at 4:30 Eastern Standard Time. So, uh, first of all, this thing you see here was my trade plan, and uh, to cut the long story short, I was actually looking for a trigger of zero point 0.5. That basically meant that if we have GBP US, if we have the manufacturing production uh, zero point 0.5 more than expected, and the expectations were zero. So if we had them at zero point 0.5, I would be looking to buy the GBP USD, or if we had them at minus zero point 0.5 or less, I'd be looking to sell the GBP USD. But my post spike trade would enter in the market 5 minutes after the news. So I use the 5 minutes news candle to make sure that I have a confirmation of the direction from the participants in the market. So let's see what actually turned up. On Tuesday, we had the manufacturing production month on month at a minus zero point 0.7. So that sure exceeds our triggers, and I was actually expecting the market to go south on GBP/USD. Let's see if that turned up. But before we go into that, let's see what the market was performing before before the news. So we were in a 5 minute downtrend, lower highs and lower lows, and we had a news which should cause the price to go down. And my idea is to sell 5 minutes after the news with the expectation that the GBP USD would continue to sell. So let's see what turned up. Instead of a red candle, I see a blue candle, which is a buy candle. So as you can see by this wick out here, the market did try to go down initially, but it failed in its attempt and it quickly reversed, and it closed above the pre-release price. So this is telling me something. The market is signaling to me that it does not care for the news as much now. It is now changing its direction, because trend plus news should mean a sure cut direction in towards the south side, but the market does not want to go down below. So now you need to appreciate what the market's telling us, and look to go long on the market, because the market does not want to go down. Uh, it could be because the expectations might have changed. Maybe yeah, since the view on the economy is very bleak, so they might have priced in a much worse than expected release, maybe at -1 or minus 1.5, and it turned out to be just zero point 0.7. So you need to understand that the zero, the market expectations, which are zero, are actually a consensus of economists who actually take the survey. So now sometimes what happens is that 20 days from now, I might believe that the market might register an X number. But coming closer to the news, I think that no, the economy is very bleak, and I might change my expectations. But I've already given my survey 20 days ago, and that's what the consensus is based on. So there are many complexities in the market, and we cannot go through everything, but the most important parameter which we look at is the price and I look at markets reaction to the news. So um, in this case, we should have seen a red candle. We did not see a red candle, and we saw a buy candle. And though my initial expectation were that it should go down, I quickly changed my mind and I pasted a buy trade. I said that I was going to buy the GBP USD since the 5 minute news candle was a news rejection candle, and I went long from 1.5474. So let's draw a horizontal line right there. 5474. So here we are, and I had my stop loss well below this, uh, you know, about at least 10-15 pips below this low, which would have been at about 38ish area, about 35 pips stop. Um, and I had my target as 60 pips. Now, my target was based on the 78.6 fib retracement level. I'll just show that to you in a bit. But around here is where my target was based. Okay, and my target was based on this retracement line. So uh, above the 0.618 retracement, below the 0.786 retracement level. So my expectations were that since the market has rejected the news, it might at least rally up till the 0.786 area, and I wanted to get out before it reaches there. So I'd maybe choose about a 60 pip target. And let me remove all this clutter so that the charts look better, and let's see what happened. So I'm long into the market, and the market goes up, and it hits our target. But before it hits our target, I wanted to share with you that the market kind of stalled out here. So we are long in the market from 1.5474, and the market is stalling. Now the market is stalling from the 78.6 fib level of this downward move. So let me place, or instead of the 78.6, it's the 61.8 level of this downward move. So the market is actually stalling out there. Now I had a few pips already, about close to about 20-25 pips, and I didn't want to convert a winner into a loser, because it might happen that the market can turn around and can go down further. Um, don't forget, we were in a downtrend, so that's one of the possibilities. So that's when I said I'm closing one third of my position at 1.5497, and I've moved the stop to break even. So one third of my position I closed right here, and I move my stop to break even. So now I have a no uh, riskless proposition, and I have a potential target of 60 pips. As you can see, the market went ahead and reached our target parameter. I just played it safe, and I could have made a little bit more money had I not played safe. But then the idea of trading is that preserve your pips. You might want to hit for the stars, but then cover your back before you can hit for the stars. So I hope you like today's video. I appreciate your comments. I'd like to recap a few important teachings from today's news event. One, uh, always be aware of what the market does. It might be against what you expect it to do. If you expect the market to go down and the market decides to go up, respect its decision. You do not dictate where the market goes. The market dictates what you do, and that's what I did. I'm a student of the market. Markets told me it's not interested in going down. I said, all right, sir, you want me to buy? I'm going to buy as long as you give me money. I have no problems doing whatever you want me to. So, and then I also discussed about uh, closing in some of your position and moving your stop to break even though it might cost you some amount of profitability, but then that is fair game because it's always important to cover your back. I hope this video helps. Thank you.